let's jump into some of the first questions. First of all, what do you see is the biggest challenge to the growth of crypto and blockchain, and what could the GCC region do to overcome that challenge?
I think the technology itself needs to develop to a point where it's scalable and it's easy for developers to build on blockchain networks, so that also the front end of applications that use blockchain technology can be easy to use as well. So I think this scalability is the tech, and I think some people might not think it's important, but I think regulation is important, and that's why the UAE is kind of very forward-thinking and trying to come up with the right balance of regulation, and they're still going through that process.
Yeah, great question. There is a lot of difficulties that will come out of the MENA region, and more specifically GCC. I think one of the most difficult aspects would be regulation and education. So first of all, how do we educate the community over here on what crypto is, what blockchain is, how to invest, how not to invest, what to look at and what not to look at. That, I believe, is the foundation to solving a lot of the issues that can come after. And secondly, after education, something very important that I believe in, and we always discuss it internally with different parties, such as the people on the panel, is regulation. How to make regulation as easily understandable and as easily accessible to the Web3 community in the UAE. And secondly, if regulators issue all these regulations, who are the counterparts who will support the companies directly and the founders to give them the easy access or give them the understanding on how to move around. So regulation, education is one aspect, regulation is the next, and the third would be who are the counterpart that will support all the projects to understand this regulation. So we would have to educate a lot of law firms, a lot of incubators in the region, a lot of free zones and the different regulators over here, so that it becomes easily accessible to the Web3 community.
Yeah, regulation and education, I think that common theme is trust is a big part of it. And yes, I actually was formerly the COO of a Web3 company that issued tokens. We could not find an accounting firm that understood how to account for tokens.
Exactly.
And how to manage a huge barrier. It seems something so trivial, but what a barrier to entry.
So I'm very familiar with a few regulators who are already educating and supporting a lot of these law firms, accounting firms, and whatso on how to access these regulations and how to be as fully regulated as possible. Something about this region specifically, they are trying to educate everyone on how to access all of this and how to support them as much as possible.
I think you should speak to a person named Toby Young if you're interested in this kind of
Very good.
professional accounting, kind of institutional accounting for crypto. But I know from experience, when I set up Alphabet Fund 6 years ago, the accounting was just not able to pick up on crypto transactions. We had to educate them, we had to show them how to use a wallet. The accounting firm was a traditional accounting firm. But now there are some startups that are coming out which are trying to help with corporate or institutional accounting and compliance for crypto transactions.
Very good, thank you. Oliver?
Well, I don't want to add something to the things we already have said, so it's a bit boring for the audience. So but what I want to say, if we look into the MENA region, is a very diversified region. So it means if I look to the ecosystem, UAE, Dubai is completely different, for example, to Saudi, to Egypt, or to other countries. So what we see just in the last, let's say, 1.5 years is a kind of separation of the ecosystems here. What I mean with this, we have in Dubai, we have an inside flow. So we're getting a lot of talents and companies coming from other jurisdictions in the world to Dubai to set up a company. So for them, you have to provide a different ecosystem as you have to provide, for example, for countries like Saudi, Tunisian, Moroccan, yeah, they have most likely an ecosystem inside out. So what I mean with this is that when you go today to Saudi, I was on the league, for example, a couple of weeks ago, and you see how many local startups they have. It's a completely different ecosystem to what we have here. With CB Labs, I incubated over 1,200 companies here in the DMCC, and most of them were not companies coming out of the ecosystem here in the MENA region. There were companies who are coming from outside inside. So if you're talking about education, regulation, all these kind of things, it's very important for me as a kind of topic, how big is the adoption of the younger generation according to the society, in a kind of ratio, the adoption of the younger generation to new technologies. And here, education is a very important topic, yeah, that people get educated in the universities, and this is what we see. If we see, for example, the adoption to DeFi, to Web3 in countries like Egypt or Tunisia, it's very high in the young generation. I think that's a very good signal for every one of us.
Very good.
I guess from my perspective, venture capital is still very new here, and there's a big gap in pre-seed and seed investment across the UAE especially. It's picking up a bit in Saudi Arabia, and the reason for that is pricing. Traditionally, this country is very known to buy assets. It's not really known to investing in assets, meaning they don't understand how to be part of a cap table. Because we don't have big known venture capital funds here that bring a huge level of diligence, support, ecosystem. So for us, it's really waiting for this venture capital market to develop. I think there's a lot more incubators being set up, which are helping really price a lot of these early stage companies. And more specific to Web3, the issue we've always had is we're within the next month, we're about to make an investment into an agriculture company. They've moved their whole business onto a specific distributed ledger technology. I'm not a technologist, so I don't know. But I think the most common thing that we see is most businesses come to us and they have some type of token pinned to their business model. Normally, you grow a company, within 6 or 7 years you have a liquidity event where the founders exit their position. That's what they work towards. The problem we have is we have startups in this space that come to us and say, we already have a free floating token that causes platform inflation, that also is subject to media. So from a risk perspective, we're looking at these companies thinking, why did you do this now? Now, if you look back at a business model, you should launch your tokens when the business is profitable. This is where you can actually build a sustainable business. But then at the end of the day, a lot of the retail audience won't buy your tokens unless they know there's going to be a liquidity event. So we're seeing this vicious cycle in the crypto space where we like the technology, but we just don't like how some of the companies are coming to us at a certain stage. So I say, to kind of answer your question, is it's developing here, it's getting better, but we're still struggling on pricing companies at seed and a pre-seed stage.
Very interesting. When I was at Crucible, we did exactly that. The founder raised tokens before anything else, and the issue was dilution. He was worried about dilution. And that, of course, came with several challenges post-raise. Thank you. Okay, so next question. What's the most important service that firms like yours provide to your portfolio companies besides financing that enables those portfolio companies to succeed?
I think that's very relevant to what we're doing. We're a tokenized, decentralized incubator, accelerator. We first started off as a tokenized VC and deployed capital into a lot of companies, and then we pivoted to becoming an incubator and accelerator, and we're focusing on people who have experience in setting up a business, whether it's successful or not, and then they want to kind of try to do something in the Web3 space, but they have good experience, but they don't have the know-how, and they want to have help and guidance from an idea stage to actually building a product or service, and then getting to market and having a token listed. We help them with that journey, and we prefer to work with very early stage companies, whereas VCs, maybe they come in when the company is ready to raise capital, but we work with them way before that, and we get them to set up their token structure, and their legal structure, and their teams, and their product or service. And what Obadiah was saying, I agree with him that, you're looking at a company and they're trying to build a tech, but then they have a token issue which is publicly listed and trading and speculative, and they're trying to list their tokens before they actually have a reliable working product or service. But it's just the nature of people who invest in the token side of they expect the token to be listed as soon as possible. That's just the nature of it. With equity, people who invest in equity, they understand that it's a 5 to 10 year time horizon before they see you putting it in their shares. But with token investors, they want to see liquidity as soon as possible. So that's why the market is the way it is. But I think Obadiah, you can look at startups that are giving up equity, and that's probably going to suit your risk profile.
Thank you.
Yeah, thank you for that. So I personally don't believe supporting projects financially is any sort of support, actually, because a lot of projects can find money from a lot of different players, and more specifically in the Web3 space, because it's so small and niche right now. Supporting projects like as Gap Capital, what we do is we actually created 2 separate funnels in which we support projects. Funnel number 1 is what we call let's just say Web 2 support, and then second funnel is the Web 3 support. So back then in the days, projects that need support usually needed support when it comes to Web 3 to Web 3. So introductions, tokenomics, market making strategies, token launch strategies, how to go to market, how to launch their project and what so. That's all, let's say, traditional Web3 support. Of course, all of this, adding the right value is very important. But what I believe right now is even more important is supporting all these Web3 projects to access Web2, and Web2 projects to access Web3. This is actually where we believe we add most value. So all of us in the team, we come from traditional businesses, Web2 businesses, and we try to link all these Web3 projects into Web2. So if it's projects who want access to retail, to commercial enterprises, to the banking industry, to government, to regulators, and what so, that's where we would love to actually give that support. And more specifically, access to new regions. So if most of our or a lot of our portfolio is outside of the UAE or the MENA region. If we want to support them coming into this region, that's a real strategic support that you can provide these portfolios and companies. I know we're running out of time, so I don't want to talk too much. I'll leave the floor to Oliver.
Thank you. Principally, I believe we are not only in the transmission in the banking sector, also in the VC sector. What I mean with this is it's not enough anymore for VCs just to deploying money to startups. The reason for that is because we are in a bear market, and the good projects, they most likely don't need money. So what they need is additional services or network. So what we're seeing here especially is, I think, providing them additional services as launchpads, marketing, networking, legal support, or at least connecting them with the right people about the right white paper, all these kinds of things is one thing. But especially if you're coming to investing in equity in startups, what we see, there's a kind of gap between the founders at the moment, because they are most likely very young, they're very technical driven, they have a lot of experience in BlockFi and with crypto and so on, but they don't match with the investors anymore. Yeah, so this high net worth individual Bitcoin investors most likely are gone at the moment in the market, and what we see are more traditional investors. So what we're trying to do and what we're trying to help as a part of our venture builder is to make them fit for such kinds of investors. So we're looking at the pitch deck is okay, we're looking to the legal frameworks, all these kinds of things. When they're going through our due diligence, we see the red flags, and then we're trying to help them to improve in these cases, so that we are able to connect them with the right investors, because still the most institutional investors, they don't have any connecting points with Web3. Yeah? So if you talk with them, you just need some additional, or the startups need some additional help to get a match at the end of the day and also to get an investment.
So from our perspective, we like all sorts of businesses that do business in the GCC, number one. You may have operations elsewhere, but we like things to be done here because we want to grow as an economy, we want to grow as a population, and if we just invest outside of that, we're not going to achieve that goal. So we have to align ourselves with a lot of the governmental authorities, the big sovereigns around us, because we're all on the same mission. Now, when we look at the portfolio, obviously expansion locally, it's a very small population here. So if you're a big consumer product, you're going to struggle unless you have a footprint in Africa or India. So for us, we're trying to expand our reach into Africa and India because you've got 1 billion people in each population. Again, in the UAE, very tiny population. So, which proposes the opportunity that from a B2B standpoint, we're probably at our strongest. I think for a lot of portfolio companies, for example, this agriculture company we're probably going to take on within 2 weeks, they want to approach big corporates, and startups struggle with big corporates. Why? Because there is a ginormous corporate ladder. So if you go to Abu Dhabi, for example, you're dealing with authorities, sovereigns. I mean, Saeed will know this very well. For a startup, you've never done business with them. So I think that the best thing where we've provided a lot of value to them is helping them get these big B2B, B2G contracts, because these are safe contracts that allow you to do all the crazy stuff. Go and do the B2C stuff, blow money on marketing. So on the upside this year, I think rather than investing more cash into companies, we've looked at them and said, if you reduce 30% of your staff, I know it's sad, people have jobs, if you reduce 30% of your staff, you're lowering your burn rate, you're getting closer to profitability, which makes you more attractive to investors. So this year, if you can get as close to profitability as possible, and we can see it in the next, 6 to 12 months, you become far more attractive than somebody who's going to burn cash for the next 2 years. So just have a little think about, from the investment standpoint, we're very risk averse at the moment. We're seeing what's happening around the world. Try and spend less cash, get closer to profitable. I'm not saying you have to be profitable because a lot of you early stage companies, because it allows us for us to look at you completely different and add more value. So I would say that's my 2 cents. Is local, obviously local support, big corporates, and also telling you how to not spend too much money.
Which can be challenging for a startup sometimes, right? Besides the money. Sometimes the money actually, I've seen, causes problems, sometimes more than anything. So please, our time